So I've previously created my expense report. I have, if we come in to my expense report. So on my expense report, I have I have a mileage entry. So these are both on the same ticket. Mileage, it was my car, so it's employee paid. So that means it's reimbursable to the employee. 30 miles, it's not billable to the customer. And so we have mileage to remote site. Okay. And then and then while I was on site with the customer, same ticket, I found that I needed to replace their 14.4K modem. And so I went down to Staples and found that they had one on the shelf that was 25 years old. And they hadn't sold it yet. And I was able to purchase it for the bargain price of $125. And I put that on the company credit card. And that is on the company credit card. So it's non-reimbursable to me. And we're going to bill that to the customer. Okay. Expense type is supplies and parts. Expense type on this one is mileage. Okay. So that's good. Now, if I come back to my unposted expenses screen, so this is in the accounting interface, unposted expenses. So on this screen, you can see the conversion from those expense entries to the items that are in the GL mapping, which is what ends up driving what we put into QuickBooks. So if I go to the setup table and go to GL mapping, and so here we have expense offset. So this is the account that the expense got paid from. So if the expense record says it's on the company credit card, then it goes to the Amex account in QuickBooks. So on this expense, we had payment method was company credit card, and the credit account is Amex. If we go into QuickBooks, we have a credit card account for Amex. So that all ties out. The expense type is supplies and parts. My setup table, I've said supplies and parts is job supplies. So now that is the expense account that transaction is going to map to. So if we come back to QuickBooks, job supplies is our expense account. Okay. And then mileage. So expense type, mileage in our setup table, when expense type is mileage, it goes to the travel account. I have it set the same for internal and external expenses in both of these cases. You can have them go to different places. And then I have an employee reimbursable expenses account as the payment account, although that one does not matter because we're going to bill the expense. Okay. So you'll see that soon. So, all right. So we have our expenses, our geo mapping's done. We have values in our debit account and our credit account for both of these. That's good to go. Ready to bill. It shows up in here. Cool. Now we're going to go to Mobius, and we're going to say create expense batch. And we should see those expenses come in here. Same thing, less detail because we don't get all of that detail in the record from manage, but we have reimbursable $10.50 mileage, and I entered that expense, and non-reimbursable $125, supplies and parts. Okay. So now we can run this batch. And this is where Mobius does its magic. And that all worked successfully. So now if we come over to QuickBooks, if we go to our American Express account, we're going to see we have an expense here. And we can go into the details of this expense. So as we talked about here, it's the expense account is job supplies, and it's job supplies. We have the rest of our expense details here. Modem 4K. If we have the customer field enabled on our expenses in QuickBooks, this is a setting that defaults to disabled. If this is enabled, we bring in the customer, so it ties out. We have a reference number. This reference number corresponds with the batch ID in date posted today. Search. The batch ID E737 Brian. So it's date, expense, number, and name. The date of the expense, we don't know who the payee is because there is no payee on expenses in manage, so you would have to set that manually if you need that field. But otherwise, we have all the details for the expense. In our next release, we will also be pulling over the attachment that was on the expense report into the attachments in QuickBooks. So that'll be coming in the first part of this year. So now this expense entry's here. Now when we run our bank sync with the American Express account, we'll pull in the transactions from our bank feed, and this will match with the transaction in our bank feed. So what this lets you do is have a full accountability all the way through. Employee has a company credit card. Anytime they charge an expense on the company credit card, they have to enter that expense on their expense report in Manage. They can attach a receipt that they've maybe taken a picture of with their phone in Manage. That expense report then gets approved, so somebody is verifying that all of those expenses are legitimate business expenses that they should have charged on the credit card. Once the expense has been approved, then you find them and they match up with your bank feed in QuickBooks. If you get any transactions from the bank feed on a company credit card that doesn't have matching entries already in, then that means that there's an expense missing from somebody's expense report, an expense that didn't get approved, and you can then follow up on that. So that's cool. That takes care of non-reimbursable expenses. For the reimbursable expenses, they get created as bills. So this is the reimbursable expense that I entered. It is payout for mileage. And so this is a bill that is payable to me, the member. And so again, we have all of the same details that we had in the other one. Category is travel, which ties out to I don't have it open here anymore, but it tied out to the account on the expense. And it's payable to me. And so then if we were to cut a check and we choose me and we need to choose a bank account, I can't show that because this is a test QuickBooks instance that I don't have any bank account set up in, but you choose your checking account, enter your check number, and you can say all of the expenses for Brian will show up here as bills, so add all, or you can select them by date, however you want to do it, whatever your reimbursement policy is, and you can save this check and then print it with your next check run. And that takes care of paying your reimbursable expenses, and then you're done.